have my money in a lot of different things. Like I said before, I don't want just one income stream. I don't want just money earned from a W-2, money from interest, money from stock paying dividends. You know, it's all about multiple income stream sources for me, and that's kind of what I'm focused on. And real estate is an incredible stream as far as cash flow every single month that's taxed at much lower rates. It's just you can't really put your money in something better to grow wealth that will last from from generation to generation and will only grow with time.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. Across from me, John Cohen. How are we?
Good would be a lie. That's every other start to the podcast is we're doing great. Regular challenges, end of year. We'll figure it out.
Hopefully. One way or another. Yeah, exactly. It'll get figured out itself.
Exactly.
But we are going to jump right into it, not too much back and forth. Got a great guest in today, a guy we've known for a while. Should be able to provide a little bit of a different perspective on real estate investing than I think some of the more known people will say. So I'm excited for that. I think it's always interesting to hear
something different.
Yeah, exactly.
This is the first time we have one of our investors.
Yes.
It's different. I don't think, most people aren't, this is different, right? It's an investor. It's not a mortgage lender, an insurance guy. The value here is, I guess, we'll find out shortly, but I think it's an awesome, we've been pushing to get someone on here. Our guest, which Chris will introduce shortly, he took the bait, and he's going to be the first one to get, slayed.
We found the sucker, basically.
We did.
I'm ready.
But Lance, thanks for joining us. You want to tell us who you are? Give yourself a little introduction about yourself.
Definitely. Well, first, thanks for having me.
Sure.
It's great to be here, catch up with you guys. Who am I? My name is Lance Moskal. I'm a real estate investor. Originally, I got into one of you guys' deals, started going out on my own, partnered up with a guy, John Geldert, from the deal we invested in, and now we own and manage 19 units out in Pennsylvania. And I'll get into that a little bit more, I guess, later in the pod. But who am I? I've got 14 years accounting, real estate, finance experience. Got my CPA license, state of New York. Spent about 10 years in public accounting, working, saving, putting max into my 401k, trying to get some tax savings on some of the money I was making. And I was just taking a step back, looking at my bank account where I was, looking at what I paid to the IRS over 10 years, comparing that with my savings. And, that ratio I wasn't really happy with. I kind of want to flip the script. So I started researching more, went to your networking event, picked up Rich Dad Poor Dad, read that book, read about 10 of his books, and figured out that there are ways that people create wealth paying smaller amount of taxes in comparison with what they're making. And that kind of took the hook on that for sure. And then I just started researching and networking, trying to do as much as I can to how to create some wealth, create a business that I can really grow in the future that can kind of just be there. I was never satisfied with having one stream of income from my W-2 job. I always wanted something else. God forbid something happened to my job. I lost my legs, couldn't go into work. I needed additional income if I have a family. Now I have a family. So that's what real estate really appealed to me. Over the years, I always had different business ideas, tried to start my own tax prep service, but I was doing similar thing that I was doing on my job. I was trading time for money, and I only have a certain amount of time. I knew it was all about leverage, and real estate is all about leverage, and you guys know that. You guys don't go into a deal unless it's leverage, whether it's the bank, whether it's equity, whether it's investors' time, money. So that's kind of how real estate kind of stuck with me. And I guess I can go into a little bit more details as far as the kind of deals that I invest in. But like I said before, I always wanted to build something on my own. I always wanted to build a business. And anything that I kind of looked into, I would always look at the profit margin, right? Like if you have a pizzeria, these guys probably make 15, 20% profit margin. If it's a bar, it's probably 7 or 8 profit margin percent. Don't hold me to those numbers. But I always ask people that had businesses, what do you guys actually make? If you make 100 grand, what are you keeping, right? And you guys know with real estate, right? When you underwrite these deals, if you're bringing in 100 grand conservatively, like conservative expense ratio is probably 40 to 50% of that. But you can probably keep about 60, 65% of that money. So I look at the profit margin on that, that's 30, 35%. And once a deal is up and running, I'm getting that every year. And I'm not there at a location, managing people, cracking the whip. The money's coming to you. And you know what I mean? And that's how it is. And that really appealed to me. Granted, real estate, the money that you're taking home, it's on a small scale. Business can make $2 million a year. And if they're keeping 10%, it's 200 grand, right? To get 200 grand passive income from real estate, you probably have to get a lot more deals. But it's a it's a process, right?
Yep.
It's a process. Once you acquire more, you streamline it. There's processes. You guys have that, different electronic process as far as collecting rent, communicating with your investors. So, that really appealed to me. I'm kind of an ops guy, accounting, finance guy. So I knew I can kind of leverage all my experience that I had in my career for the past 14 years, 10 years at the time, because I really got into real estate about 4 years ago. I just wanted to roll up everything into one, use my network, use the people I knew, use my job experience, and use to kind of build something for myself. And, real estate is probably the one thing that just really hooked me in over 10, 15 years of searching,
So I think that's going to sit well with people, because a lot of people have that, a lot of people probably listening, and, they're coming out of it, they've been working 10, 20, 30 years, and real estate is like, it's that, sexy girl at the end of the bar that you don't think you have a shot with, but you really want.
Yeah.
And sometimes you're like, well, I don't have the money, how am I going to be able to do it? And I think that's where, where I think people are going to get a lot of value out of this, is because Lance, had a great job, right?
Yeah, I still have my great job. I still love my great job.
So working your job, you were able to, see what was working and what you wanted to do, and then you just tried to surround yourself with the right people. And your first deal, I know what I think I
walk through all my deals. Yeah, they're all
the first deal,
the next one.
Yeah, and the first deal you did was not as a general partner. It was, I'm going to leverage my IRA or whatever and see if I can get a little bit more. And so the first investment you made was exactly that. It was not general partner, I want to do this on my own. It was, let's test this out and see if it works. Whether it worked or not, we could talk about that, because I think it'd be fun to talk about, because it had a really good idea when we put it out there.
It just came full circle. We all just got our money back and then some. So
but talk about that first investment. What some of the challenges or the hurdles, or why you did it, or what made you make that decision? Because I know you went to that background and why real estate was attractive, but what are those some hurdles that I think everyone has? Yeah. How are you able to get over some of that? And maybe it's one or two. It doesn't have to be everyone, because I know the list can be nonstop. But what was one or two of the biggest hurdles that when we finally met, how we met, and how did we get you over that hurdle? And anyone listening could hopefully use that the same way.
Yeah, so there's definitely tons of hurdles. I'll agree with you on that. Whether it's on the LP or GP side, and with real estate, it's all about pushing through. Once you get to a hurdle in real estate, whether you already own the deal, you're not going to turn around and walk away. You own the deal. You have to push through it. And that's something that I enjoy with our deals, is something's always going to come up, and we work our way around it, or we work our way right through it. And that's the only way to do it. I'm not going to walk away from a deal I own. I already put my money in it. When stuff comes up, I got to tackle it. I got to handle it. So as far as talking about how I got into my first deal, you're talking about the deal we invested together, not on my own. So the deal we invested in together was a 17-unit deal. I think it was like a 10 cap or something in Covington, Kentucky. It was a couple different buildings. I believe one was a 2, one was a 9-unit, and one was
6.
Right?
6. Yeah,
that would be 17. That's 6.
Yep.
So that was the first deal we got in, and basically, we got a chance to look at the underwriting file, the PPM. We did our own research on the area because we kind of wanted to scale a bit. And I think it was even before or after that deal, we got a list of numbers. We were calling owners, trying to source more deals. But as far as what got me over the hump, a friend of mine, Anthony, who invested in the first 8-unit deal with you guys, he was showing me some of the numbers, and I was just looking at it like, wow. Well, that one I think was bought all cash.
Yeah.
So, but anyways,
and the 17 unit.
They're both
all cash. Yeah. So I was just looking at the entry point and the exit point of that deal, and it was something like you guys got in for $400, and you're getting out for like $500 or $550, and I looked at that. That's something like 40% return on the money, something like that.
Yeah,
40% would be $560.
Yeah, it was in and around those.
So I was looking at that. I was like, all right, this is a no-brainer. You guys can go in, renovate properties, raise rents, raise valuation, force the value up, and make money. To me, I got hooked. What really got me hooked was, even if it's not 40%, if you made 30% on your money, like a guy like me, I paid 20-25% taxes. You make 30% on your money, that's really like a 40% return. You know what I mean? Before taxes. I always looked at it as net. Gross. Net after taxes. And that would really hook me. I only need to get 12-15% of my money, and I'm really making like 20%.
Yeah, so
it's hard to do that.
So that challenge, basically you looked at it saying, okay, well, you know what? I have a relationship with somebody that has a relationship, and they've done a deal. Yeah. So do you think if that relationship wasn't there, how much longer and or what other, what would you have done to find real estate as an opportunity? Because, you read a book, you got involved, but, that relationship with Anthony, who ended up, we ended up doing the deal with, and he was in a prior deal and whatever. Long story short, if that relationship wasn't there, that sort of opened the door to an investment like this. What do you think your next step would have been if that wasn't the case? Because that was, one hurdle you got over is, some people don't know, how can I invest in these deals, or how do I find these deals, or, how do I do that? You had a relationship. So if that relationship didn't exist, what do you think your next step would have been?
Well, so I started by coming to the networking event. It was August 2016. He told me about the deal. He invested in work. I came to the meeting, met you guys, met some of the other guys. You guys also offered a lot of knowledge and real world experience with real estate. So had Anthony not got hooked up with you guys, and I didn't get hooked up with the meetings, I don't know how quick or if I even would have gotten to real estate, to be honest with you. You remember when we first started coming to the meetings, I was always asking a lot of questions. The numbers look great. I just wanted to learn more and more. So the networking event that you guys held, which was tremendous value, that's what really got me in real estate, to be honest with you. And would I ever have got into it on my own? Probably, but who knows? I don't know.
So what I'm hearing and the value that I think people can take out, and I say this all the time, if you want to do real estate, whether you want to be a GP, an LP, you want to be, quasi both, sign on balance sheets, put money in, do the physical day to day, the thing you have to do is expose yourself to it.
Yeah.
So if you don't expose yourself to it, none of that stuff is going to happen. And one of the major hurdles that most people have, not only from an investor side, because Lance went full circle. I mean, it was knowing nothing, educating, investing passively, to very shortly thereafter buying deals actively while he still has a full-time job. So that's a transition that I think everyone wants. But, that first hurdle, I think everyone's first hurdle is, how do I get involved? And it could just be going to a network event. It could be writing a check. It could be bringing a deal to the table. But I think the first hurdle is you have to physically get involved and put yourself out there.
For sure. And we can go through all my deals. I know that was like the back of my hand. Back to what you were saying, you're never going to catch a fish unless you got lines in the water. We're not going to jump into your lap. You got to go ahead and do so. Everyone's all about taking action. Obviously, you got to educate yourself to a certain extent, but it is about taking action. And the first deal doesn't have to be the perfect deal. Before I was getting into it, I said to myself, this is not the perfect deal. My partner John bought a 2-unit for $100,000. We're buying this for $120. But you know what? That first deal I got in is clear cut, the easiest deal that I have to date, and it runs itself on its own. I spend minimal 30 minutes a month on this deal, and it's cash cow, but a small cow.
How many different types of real estate or assets or ways to invest have you gone through, and did you look at before you went into the first deal with John?
Sure, other type of investment vehicles. Yeah, I put my money in different type of things: stocks, dividend paying stocks.
What about just real estate? Because the reason I ask is because I started. We started trying flipping, then we tried to do the tax deed stuff that John did, and then we found multifamily. It was going through that process of trying different things that I think was really invaluable for me, and by extension, my mom and Anthony. I'm curious from your standpoint, did you do the same process, or was it, you found it earlier on? Was it more of the, as you learned more in the education, you kind of figured out what you were looking to do? What was that like?
Sure. So in the midst of going to your networking events, heard a radio station commercial, texted Than Merrill. I don't even know if it was him or someone. I went to a networking event, Times Square in New York City. A couple hundred people there. They're talking this and that. I'm asking questions. I talked to some guy at the end. I go, what are you doing? He goes, flipping. I was like, how much you pay for money? Oh, 14, 16%. I was like, that's too expensive. How are you guys making money? The guy lending you the money is probably making more money. So, and also flipping, I know from the tax side as a CPA, flipping is it's taxes ordinary income. If you hold it less than years, the highest tax bracket. I'm trying to pay less in taxes, not pay more and boost all of my income into the next bracket. I wanted buy and hold, which is the most significant tax advantage, and I wanted to build more income and pay less as time goes on, not more. Right. So as far as what I looked at, never looked into flipping because I don't come from a construction background. I more so wanted multifamily investments because I felt one roof, multiple units. It kind of scaled down the risk.
Well, not to interrupt you, it sounds like you kind of did look into it, but you just realized very quickly it wasn't the right avenue for you because you didn't have the construction background. You didn't like the tax structure that it came from. So I don't want to put words in your mouth, but it does sound like you at least tasted it very quickly.
Sure. But I think understanding that, I think a lot of people, shining object syndrome. I know, we had the land investor.
Yeah.
Mark. And he was saying, there's nothing sexy. Flipping houses is sexy, right? You take a shitty house, you make it look pretty, it looks nice.
Yeah.
Do you make money? That's for the jury to say. But I think the first thing that you looked at it and you just realized tax wise not going to work. I don't have a construction background, so I think that you saved a lot of brain damage by knowing why it didn't work. And I think that's just as important as knowing what you want. It's knowing what you don't want, because you could easily whittle through things a lot quicker if you know what you want and what you don't want. And you had a very clear goal of, I want to make income and pay less taxes.
Yeah.
What vehicle's going to do that? Yeah, there's only a handful of them.
Yeah, you got to back into what you want to accomplish first before you can figure out which one is best suited to you. Because I don't think there's any asset class or investment vehicle in real estate that you can argue is, better than the other unless you have certain goals in mind.
Correct.
If you have no goals in mind, how can you say one's better than the other? There's pros and cons to anything you
Correct.
do.
Exactly.
So backing into it, you decided, it sounds like very quickly that you're like, all right, this flipping nonsense, in your opinion, was nonsense.
Yeah, well, I shouldn't say nonsense. Just there was more to it, right? Like I had to rely on an agent to sell it for the price that I needed to make my return. I had to rely that the market wouldn't turn, and I was holding the right type of property that was in the right price range, that had a high demand, not high end. Like if you're flipping Long Island high end, close to $1 million, you got caught with too many of those properties years ago. You got hurt bad.
Right.
But the small deals are still going to move. People still want houses, 250, 350, 450. And back to what you were saying, because I listened to that podcast on the way over here. Flipping is sexy, right? It's on TV. Everyone sees what's going on. Nice bathroom, nice kitchen, nice floors, nice paint. It goes quick. I wasn't doing it, or that's not what attracted me to the asset class I'm in. It's more so cash flow and building passive income over time, building a business that's going to have recurring revenue every single month, and that's kind of what I was going for.
So I have another question, because I think that it piggybacks well. So I know that Lance recently got married.
Yes.
Lance recently has a beautiful little baby girl.
1.5 years old. Her name is Viviana. She's the best. My wife is number one.
So there you go. You said the right stuff. But because I know what it's like, as most people know by now, and my daughter and my wife. Has anything changed from that experience? Because I think a lot of people are family oriented, have families, and or looking at families. What has the deal risk change? Has I need to hit a certain cash flow. Is there anything, because that's something that I think a lot of people look at, and husband and wife teams go to all these real estate events, and then they look at it from a standpoint of your flipping background, right? Your mom, your cousin, and you guys wanted to do a kid. So I think there's a lot of family component that goes into it. So I think one question is, if your wife is interested, how does that dynamic play out? Having a new kid and still maintaining your job while you're doing real estate. Yeah. But speak to any and all of it, because I think that's something that we don't talk about here at all. And you're the perfect person to bring in and talk about that.
Great topic. So I'll just say, number one, I bought my first 3 deals while my wife was pregnant with our child. I bought a 2-unit, a 4-unit, and a 5-unit. And has anything changed since then? Yeah, for sure. I look at deals a little bit differently now. I have less time to commit to real estate. So this deal I just closed on Friday, it was hovering around 30% returns after we get it stabilized in about 12 to 18 months. And I was hesitant on it because I knew I had to have more capital left in that at refi at 2 years versus the other deals where some of them we don't have $1 or own money left in the deal and it's cash flow every single month. So yeah, it has changed in a big way. The deals have to make sense. I can't just do deals to do deals. I can invest in deals that you guys do that's going to give IRRs of, I don't want to throw out numbers, but 15, 20, for the stretch of the deal. You know what I mean? If I'm going to put money in the deal, that's only going to make me that in 2 or 3 years. It's smarter to put potentially money in one of your guys' deals where it is non-recourse versus what I'm doing that has a recourse aspect and time aspect, and I'm in charge of it. And, accounting records at the end of the year, tax returns, bank accounts, taxes get paid, credit card gets paid, issues with the tenants, we got to resolve them. So there's more of a time commitment with the deals that we do, but at the same time, still want to put my money to work. And if it's a good deal and we believe in the deal we bought last week was 1991 build, beautiful condos, 7 of them from an older owner, 85 years old. And, it was a sweetheart deal we felt like, and I went for it. But back to what you were saying, things definitely change when you have a child in a family and you just want to be more efficient with your time and you kind of have a different purpose. I look at things a little bit differently. It kind of pushes you to hustle a little bit more. But, having a kid is great. Having a family is great. We're going to expand our family and, soon, eventually. And I'm sure the next one, God willing, would push me even more, and I'm sure it'll do the same thing for you. And eventually, when you get there, Chris, I mean, it's great.
So let me ask you a question. So when you're looking at deals now, do you have any goal or, when does Lance want to stop his full-time job?
Yeah.
Because your income at your full-time job is X, right?
Yeah.
And your income from your cash flow is Y.
Mm-hmm.
I'm assuming you have some number where it's like, I can make a little less to spend a little bit more time as this grows larger. But is that like on the card? Is that what we're working for when we're looking for deals? It's how can I buy a deal that will offset my income to a point where? Or is it, no, I love my job. I want my real estate to be less headache while I still do my job, and then it can slowly do what it's got to do. Is there anything does that come into play when you're looking at deals? Like, hey, yeah, this is a great deal, but not today. Or this is a great deal, and it's going to chunk off, 20% of my income. When it gets there, we have to do it. Or in any way, shape, or form.
Yeah, no, it's a great question. And I feel like that answer will change year after year. In the beginning, it was financial freedom. Let me replace my income. Now, I really value my job. I love my job. I've been there 8 years. It's an incredible position, and I'm fortunate to be able to do both. Use my time off to look at deals, close deals. A lot of it is done on the weekends, waking up at 4 or 5 in the morning, going to look at deals. So, right now I'm more focused on kind of replacing my wife's income because she recently stopped working. She was a part of the Fox Disney transaction. So I'm more so trying to, supplement my wife's income as well as, paying for life expenses with a child. There's nanny, there's daycare expenses. So I'm just trying to, at this point, earn as much as I can. And I like juggling both. I like doing both, and I'm able to. So as long as I'm able to do that, I will. As far as, if I ever get to the point where I'm fortunate enough to do real estate full time, it would 100% be something I'm interested in. But right now, it's not something I put too much thought into. I'm more so focused on the current deals I have, my job, providing for my family, and making things work on a day-to-day basis. But, I do love real estate. It's definitely a passion of mine, and I'm just fortunate to be able to do both right now.
And I think that answer, I wasn't looking for it, but I'm glad you said it, because I think most people think of real estate as, I want to quit my job and do this. This is the
reasonable.
This is the complete opposite. Like, listen, I like my job. I like what I do. That's not the main purpose of it. If it gets there, it gets there. But I'm doing it for a totally different reason. I think most people look at it in a totally different way, where it's, I make $100,000, I need to make $10,000 a month, and then I'm done with this.
Yeah.
And I think that, that's the other side of the coin. It's not always about how can I get rid of my job, right? You can maintain both if you put yourself in the right situation. I think that is, something that people have to hear, because a lot of people say, pick one, do this, try that, offset it, full-time real estate investor, whatever. And I think, you're a living, proving example of someone that can do both, and it can be done. So there's no reason why it shouldn't, people shouldn't look to do both.
I will say I recommend all young investors to keep their job. You need income to invest. You need to be able to generate capital in order then to make it work. If you just run away from your income stream, how are you going to be able to scale as quickly as you want? You got to be reasonable. And I think a lot of people, not that they're unreasonable, but have unreasonable expectations. And
they are unreasonable and have unreasonable expectations.
Well, I mean, that's a big thing for me that I've realized a lot lately is over the last 3-4 years, I've been fortunate enough to be able to invest, X amount. And I have a lot of friends that aren't making, significantly less than me. I know they're making good money, especially for living in New York. They've got nothing saved. They've got like next to nothing. But it's just, I think it's more, I think that's something of a cop-out though, because I know it's not like they're making, $40,000 in New York. Because if you're making $40,000 in New York, yes, that's tough. But if you're making $60, $70, $80, $90, $100,000, you can easily live on $40,000 in expenses in New York. Go get roommates and rent and stuff like that.
So you just hit the nail on the head. You need roommates. You can't do it with $40,000. You're the only working parent of 3.
Right.
You're gonna have a really hard time.
No, of course, but I think is there always the person that is doesn't have the resources to get that help? Of course, but even if you have a family, you can go stay with your parents for a couple of years to save up some money. I think too many people are so eager to live that, young adult lifestyle of owning a home and having the car and having the dog and having the kids and, putting on not this show or these airs, but, they have this picture in their head. And I think the picture needs to change from, that to, the 50-year-old guy who goes to the gym at 10 a.m. every day because he saved up $30, $40, $50,000 a year over the last 25 years and has lived a $40,000 lifestyle, but he's made 80. And I remember there was some article or book or something where they broke down like the average millionaire. The average millionaire lives in a lower middle class neighborhood. They drive like a Toyota or a Honda, and they've just saved like 25% of their income for 30 years.
And they put it to work.
Yeah,
You know what I mean?
and they invest it. They don't just sit on it. And it's like we have this, you know, I think our culture has this picture of what a millionaire is, and it's not a million saved. I think to most people, a millionaire is someone who makes $1 million a year. That's not a millionaire. That's a billionaire.
Yeah.
You're making $1 million a year. You're a billionaire. You're not a millionaire. It's two totally different things. A millionaire is, you know, the guy with the white New Balances that mows his own lawn.
Yeah,
that's the millionaire.
So I agree with that 100%.
You can't just book by its cover. You know?
No, you can't.
Know.
And I think that I do think it has to be a complete change in perspective because I think even when you started working for us, you know, and I tell every single person that comes into this office and every kid and the two workers we have, I said you should be living. You know, what is your bare minimum? And don't tell me you need 4 personal trainers and you got to eat, you know, you got to go to Whole Foods and you need 7 cups of Starbucks. None of that is needed. If you really want to do right, live like you make $10,000 and invest every single nickel you possibly can over that because that's how you're going to be able to get to the place where you want to be. Because I agree, there's no reason why if you're making 60, 70, 80 grand in New York, you can't invest properly.
Yeah, you guys made a good point. Like a lot of people, they should be saving their money, but saving the money is just half the battle. Like I've touched on that when we first started the pies. Saving is just half the battle. Like if you guys put your money in the bank, inflation is killing it. It's a silent killer. You know what I mean? Inflation's around 2-3% a year. You got 100 grand in the bank at 3% inflation. Let's say you lose around 3 grand a year. It's what, 88 grand after 4 years. If you invest in a deal 100 grand, you're making 20% a year. It's $1.80. You could have doubled up your money in 4 years. People don't look at it like that. People don't understand because the money's sitting in the bank. They think it's safe. Yeah. And that, right, it's that idleness can kill. You know,
I have that argument with my mom all the time. She has money in her 401k and she doesn't even invest. Like she's like, no, just leave. I was like, Ma, you're losing money every year. She's like so risk adverse. I was like, go buy a stupid mutual fund. Just something that makes a little bit more because right now you're literally losing money.
Well, that's what I was going to say. I think I somewhat agree with you. I do think it's more than half the battle because I think people overthink what to do with the money. I think if you have
it's hard to invest.
Yeah,
it's scary.
It's scary. I don't think it's hard because I think if you have you do, but I think if you have nothing, if you know nothing else and you have no time to learn, that's just put in an ETF or a mutual fund and spread it out across several different things. Do the traditional bonds, equities, ETFs.
Education.
But if you want to now take that money and do more with it and try to do better. That's where I think, the real estate and stuff comes into play. And you do have to spend more time, and it is more of the battle. But I still think at the end of the day, people's inability to save is significantly more than what to do with the money that you save.
It keeps you from investing. Like you said, I mean, I saved my money for 10 years, you know what I mean? And it was just sitting there. I wanted more control. I made good returns on my money, but I wanted more control. I wanted to put it in an asset class. Everyone says real estate's tangible. You can see it, you can touch it, you can feel it. I wanted to put in something that I have control. You have a somewhat control if you put it in different stocks. They're giving you a good return. You don't have actual control. You're not actually controlling the business per se and the expenses and all that other stuff. So, I have my money in a lot of different things. Like I said before, I don't want just one income stream. I don't want just money earned from a W-2, money from interest, money from stock paying dividends. It's all about multiple income stream sources for me, and that's kind of what I'm focused on. And real estate is an incredible stream as far as cash flow. Every single month that's taxed at much lower rates. It's just you can't really put your money in something better to grow wealth that will last from from generation to generation and will only grow with time. And we can touch on other things. You can buy real estate's an asset. You can buy $100,000 property. You can put down 20%. You get all the tax benefits, all the depreciation. The bank owns 80% of it really because you put debt on it, but you're getting 100% of the depreciation. If the property goes up 20%, now it's worth 120. You just turn 20 into 40, and the bank is just making what the bank makes. You know what I mean? And with inflation, you're paying debt today with money that's inflated in the future. It's worth even less. So it's a win-win from all fronts. And we don't need to break down every single profit center in real estate, but
I think
it's more than you can count on one hand.
Yeah, exactly, and that's the thing that I think people discount, right? And they look at the risks more than the rewards because people always say real estate you could control. Yes, you could control part of it. You can't control the world ending tomorrow,
right?
But if you put the right debt on a property, the world can end tomorrow. If it's if it's doing what it's got to do, you're going to be able to ride through anything that's out of your control. If you put the wrong debt on it and you put the wrong tenant in there, you're going to have problems. Yeah. But you can control a lot of it, and being in control of your investments
it's important.
Is extremely important.
So I think it's interesting. I want to slightly segue.
Sure.
You obviously, came to the meetups. You invested in one of our deals. You gave up control mostly, if not fully. Then you met, John Gelder, and you guys went off and started doing your own thing. Can you talk about that process of meetup, our deal, and then, meeting John, what that was like, what you looked for in a partner, why you guys decided to do what you do, and, what you've learned over the past, what's it been, like two and a half years?
Yeah, we've been investing together about 2 years, looking at deals for close to 3 years. I'd love to get into it. I'll just start off by saying it's always important to find the right partner. I'm a CPA, finance background, sort of a numbers guy, but at the same time, I get involved with all aspects of the business. My partner, John, has about 20 years licensed home inspector, construction experience. So, we formed really a great team and worked really well together. And I'll say we probably worked better than either one of us thought we would in the beginning. And that's really important. That doesn't always happen with a partner, but it's very important in the beginning to find a partner you think you'll work well together with, go into a deal with them, and then reanalyze how it's going. I'm fortunate enough, we both are, that it's worked out great.
Sure.
And we've been able to go after a bunch of deals. So, I'd love to get into how I kind of went from a passive investor to an active investor. So I started going to your guys' meetup, investing in a deal, was learning more and more by talking to you guys and finding out what was going on with the deal. And then at that point, I was like, all right, I want to go look at deals. Went with John to go look at a deal in Pennsylvania. It was a 100K 2-unit property that needed about $30,000 of work. After the work was done, each side rents for roughly $1,200, appraised for about $180, was able to pull back, I think, mostly all the cash invested, and it's still cash flows. So that's the kind of deal I wanted to go for. But me, got obsessed with the numbers, was also talking with a friend of mine looking in Binghamton where, the cap rates, instead of being around 10 in Pennsylvania, were probably like 15, 16. But you guys know, once you hear cap rates like that, you think it must be a war zone.
Yeah.
You know what I mean? So I would say, took 10 trips to Binghamton with a really close friend of mine, Chaim, who also just recently had a baby girl about a day ago.
There you go.
Second kid. We went up to Binghamton about 10 times, probably looked at 10 deals the first time, about another 5 deals the rest of those times. Had a couple deals on the contracts, paid for 3 and 4 inspections, walked the inspections with the inspector, and learned a lot about those deals. Never wound up pulling the trigger due to different reasons, but back into the deals I'm investing in Pennsylvania, just started looking at deals, underwriting on my own. I learned a lot by running the numbers, seeing what they look like, and eventually we came across a 2-unit property for about $120 grand. We got it for, needed about 10 grand of work per side. Now we have a renter for $1,200, $1,175. Not a lot of headaches, and we recently got that property appraised for $185, and we were able to pull out about $138 and change. So we got back the majority of our cash invested. Then again, there were closing fees and everything, and each of those units probably cashed about $350 a month, $700 a month. Yeah, home run deal, smaller deal. You know what I mean? You probably have to do 10 or 20 of those to be financially free, and they're harder to find now because prices have gone up. But that's what the first deal looked like that we got in, and very fortunate that it worked out great. And then from there, you just want me to get into other deals we've done?
Well, I actually want to touch on something that I think is interesting. I'm curious your take. The time and money you spent on those deals in Binghamton.
Yeah, about $4 grand.
How do you view that?
I view it as a lesson. I don't view it as anything negative. I learned more going to Binghamton with a close friend of mine than I've learned, at any class in college, really. Yeah. You know what I mean? It was 10 trips. It was 10 trips. Up at 4 a.m, on the road at 5, up there by 8, at the diner eating, and then blasting out 10 deals, and deals that we thought looked good. Then we would have an inspection, and it didn't look good. Yeah. You know what I mean? And I learned a lot. Yeah. You know what I mean? Learned what to look for, what not to look for, what could be a problem, what can't be a problem. And part of the reason why we didn't close on those deals was my level of experience was lower in the beginning, and didn't realize that some issues probably weren't even that big of an issue and just could have been tackled and worked through like any hurdle, and they could have worked out. Right. A couple of friends of mine, they did wind up purchasing a deal in Binghamton, and it's a killer deal. I mean, they're making great money. There's 9 rooms, it's a sorority house, cash flow's great, can make it work in any market. And
that's the thing that most people are scared about, right?
That's
and people are scared to lose money
and time.
Yeah, and
we weren't.
But you have to. I think, I tell people all the time, I'm going through this with Anthony, who's, one of our cold callers, working on the mobile home side, is you got the best decision you're going to make could be the one that you pass on, or you do due diligence, and you lose money or the time and effort. He's lost $4,000 going to Binghamton, plus your time for 10 trips or whatever it was. But
it was a lot.
What you learned during that process was probably invaluable information that now you can use on every single new deal. And I think that people don't do it enough. And I say, put an offer on a 100 unit, on a 2 unit, and put the offer in, and go do the inspection, walk through it. There is nothing, as long as you have a good contract, that can go wrong by doing the inspection, getting cold feet, and bailing. Because at least you're going to learn something that you would have never known prior to. Even if the inspection comes back, this is the best thing in the world. If you get scared, you can always blame it on something, as long as you have the contract out. Now, you don't want to make a reputation as blowing out of deals.
No, of course.
But, if you find things out and you do the inspections and you walk through it and you understand the market and you do that over and over and over again, you're just more prepared.
You're going to learn,
on your next deal.
Yeah, it's the agent that gets mad at you.
Exactly.
You're pulling out?
Yeah, exactly.
No, go in with the intention to buy it, but if things are wrong, bail. I mean, I've learned more from the deals we haven't done in Jacksonville than the deals we have done for sure. There's probably 3 or 4 that we haven't done for various reasons, and I learned way more about building material and property and water flow, and I don't know, could probably go on for 10 minutes, but learned way more from those because we found out problems and why there were problems and was able to bring that on to future deals than I did by the deal we bought that went well. Like Ortega, I learned nothing from because it's gone fantastic. Except I learned how not to install a dual room AC. You should have seen. I have to show you the pictures of this thing afterwards. I can't put it on the video because our Lisa forbid us to, but it is the worst AC installation I have ever seen. There's just tracks going on the inside of the unit of just like wires and coolant. Oh, it's terrible. But besides that, the deal's gone beautifully. So I learned nothing from it. Realistically,
the deals that go really well that you don't have a little bump in the road, you don't know what you don't know.
Yeah.
So like when you do a deal and you realize like all the sliding doors are put in upside down, you're like, now I know how to do it.
Yeah.
So, and you need to get those. You need to experience those, and that's the critical part. And then taking that information and putting it going forward. But the deals you don't do are probably the best deals that from an education standpoint. Now they may turn out, we had deals in Jacksonville we passed on, and they're turning out to be beyond home runs. And the Binghamton deal you didn't do, it might have been the best deal in the world. But because you didn't not do the deal, you didn't make money or whatever it is, that you can't quantify why that becomes the best deal for you, because you took that information and now you look at 35, 100, 200, 300 deals with that loss. So yes, you don't do that one that might make 1,000,000%. But you do 17 other deals because of what you picked up there. That's unquantifiable because you might not have ever done or not done a deal because you didn't learn there. So
nothing's a loss unless you don't learn anything from it.
Exactly.
Unless you look at it like a loss, nothing really has to be a loss. You can learn something from anything. You walk into a wall, in your head, you can learn something.
Yeah, don't do it again.
But
I think what are some of the things over now? Getting up to how many units you guys?
So as of last Friday, we closed on 7 condos. We're up to 19 units. 18 of those are traditional multifamily properties, and one of them is an Airbnb log home that we're trying to sell. 10 cap Airbnb log cabin.
Have you rented it out?
Yeah. So last year it's made about 18 grand.
There you go.
Yeah. So I think a full year probably pull in 25K. And
that's awesome.
We're asking, trying to unload it for like 230, 240 right now. So it's definitely a great property for sure. Mm-hmm. If you guys know anyone.
Anyone listening, if you want to buy a cabin, either for yourself or for an Airbnb rental, it's making some money.
Killer deal, 10 cap. It's hard to find those nowadays, especially for a vacation rental that you can use whenever you want. Yeah, for sure.
So that's super attractive. Yeah, to for the right person. If you have a rental income of $5,000, and it's something in an area, I know where it is.
Mount Pocono.
If it's in the Poconos, you use it a couple months out of the year, you rent it out. If you could offset your mortgage, that's not a bad second home, vacation home.
Beautiful property, traditional log cabin. It's beautiful.
So what are you guys doing going forward? Are you going to continue to look for same area, similar type stuff? Are you changing things up at all? What's in the cards for you guys for the next couple of years?
Yeah, so something I kind of wanted to ask you guys, if you guys were in my seat, had X amount of units that I have, what would be the next steps you guys would take? Traditionally, I would love to get one of those SBA loans that's non-recourse, better terms, interest only, the longest amortization period you can get, 30 years. What would you guys do if you were me?
That's a good question.
Yeah, so I think that I tell people all the time, opportunistically, and I was going to ask this question, you proposed it this way. I know you guys refied your properties, you pulled out a lot of money. Now, opportunistically, I don't know if the option's there, but I don't know if you'd ever consider it. But one thing that I would consider if the profit margin and the money was there would be to potentially look for, a small balance loan, maybe 50, 100 units or something bigger. If you found that, I would love to know what the portfolio was worth. And it's just you and John, maybe a couple of investors. But if that thing was worth a certain amount of money that you can sell and get into a bigger deal, I would think about it in some way, shape, or form. I don't know if it's possible.
Because it's harder to package them together and find the right person.
Yeah.
Don't load one at a time.
Yeah, but if you were able to, like if you spoke to a good broker and said, here's a really good cash flowing asset at a 10 cap or an 8 cap or a 12 cap, if you guys are all in at 10 caps and the value of that portfolio is at an 8 cap, you're going to have great upside for doing what you did. You could sell 19 units at, $80,000 a door, $50,000 a door, and you paid $20,000, you're going to have a huge amount of money you could roll into a nice 50 unit, 100 unit, 120 unit, whatever it is, where it's achievable. Now you got to find a market, a location. You got to be able to put all that together, but then you're going to be able to take your 19 units over 6 properties or 3 properties, whatever it is, and you're going to be able to put it on one piece of property. That's something that I would look to do, and or leverage your experience. That would be my plan 1. Or plan A. Plan B would be leverage my experience and then maybe go look for, a 50, 100 unit. And then plan C is it ain't broke, don't fix it. Continue doing what you're doing.
I'm different than you. I always think that it's not smart to sell everything you have that's working well to roll into one property.
That's true.
Because if you fuck up, you had something good that you've now fucked up.
Yep.
I'm more of the mind of maybe can you get to sell half to get into a 30 unit if it was a 50 unit, or sell 2/3. So that way, at least you have some of that, but then you're scaling up. Or can you go another 2 to 5 years, build up more, then sell off the original link? You know what I mean? Like, I just think moving into one property in a different area when you have something that's going what sounds to be very good or relatively good, do you really want to take that risk to put it all into one basket and that basket doesn't do as well?
So the other thing to look at, 19 units, it's probably got good value. It's probably worth the depth probably over $1 million, right? Or on all
no,
close,
well under $1 million.
Oh, really?
Yeah. I mean, I can tell you aggregate. What is it? It's 101 deal, $138 on another deal. It's lower.
Okay, because I was going to say because you could probably wrap that 19 unit up into one loan.
Mm-hmm.
And cross collateralize it and get maybe a $700,000. I don't know what the value is, but
they're owned in different entities. So I just feel like,
well, is it the same principal borrowers in all of them?
It's as far as equity structure. Yeah, me and John are all 50-50 equity. That's our structure.
So you could probably take all those, roll it into like a fund-esque structure. It could be owned in different entities. Let's say you put like Lance and John LLC. It owns these deals. That's the new borrower. And you cross collateralize all the properties. You may be able to get a non-recourse option, a better option. It may be available. I don't know enough about the deals, but that's something else you could look at. Because I agree. Listen, in a perfect world, if I own all my deals 50-50, me and whoever, I wouldn't sell a thing.
Yeah.
Unless I had a ridiculous upside. Because you're owning deals, you have their cash flow and they're working.
Their cash flow.
So there's no reason to sell them unless you get some guy that wants to come in and just buy.
Yeah.
Buy them. But me, I would never sell anything. If I had the opportunity and the ability to just hold it forever, pending I know what the capital is going to be to fix it and the ongoing stuff, but I would hold it. I would, I tell, what I'm doing right now is I'm building up as much cash as possible to buy the very best deal, not deals. I want to buy the best one deal. Quality is better than quantity every day of the week when it comes to real estate, because I'd rather put $500,000 into a deal that's going to make 6% no headache than $100,000 into a 25 cap that's going to be, I'm going to bang my head against the wall every single day.
Yeah. So let me ask you a follow-up. Let me rephrase that question. Would you buy 2 options? Would you buy if you were me? Would you buy a $1.5 million deal, raise a couple $100,000, promissory notes at a certain rate, keep the equity, or team up with a syndicator and bring equity to the table, find a new deal in another market, and establish yourself that way? Given my work experience, what route would you guys go?
I would go the other route actually and see if you can find a few people and raise money to partner with yourself if you have money.
Yeah.
Because you've built up 19 units worth of credibility. That's not,
you need a track record.
Yeah,
but that's not insignificant. I don't know that, like, if you're saying, like, coming to us and being like, hey, Toro, you know, I want to partner up with you guys. I think you can actually find, you know, 5 to 20 people that would be willing to invest alongside you guys on your next deal, where you're, you know, you and John are 30% of the equity or something like that, and you guys can go buy a 20 or 30 unit in a similar type market. I don't necessarily think you need to partner up. I think doing promissory notes and keeping the equity puts more risk on you guys, because you've got to now hit those promissory notes. You're going to feel
more
indebted.
debt to cover,
Yeah, I think that's, you know, in my opinion, I think that's going to create more stress, anxiety.
Depending if those promissory notes are at 1 or 2%. But
of course,
yeah, well, they're not. No one's going to
I think you're better off, in my opinion, I think you're always better off finding a partner that's going to share on the upside and the downside than getting a promissory note, unless that promissory note is going to be your debt.
Yeah, it's leverage. I mean, it's like you said before, right? If, let's say you and John together have 200 grand. You guys can go buy 2 more duplexes for 100 grand a pop. Or, well, maybe more with a little bit of bank debt. But if you have 200 grand and you can do 70-30 splits with investors, you can go buy 2 20-unit deals.
So does it make sense to syndicate those smaller deals to support the admin, the overhead, and all the fees with the lawyer and everything? Does it?
I think we're
less than the bigger deals.
I think where it makes sense for you guys is you get to invest in those deals without needing as much of your capital.
You're going to get the
benefit.
I
think, yes, some of the work is going to offset the money you might make on the other investors. But what it's going to do for you guys is, one, it's going to get your foot in the door on smaller multifamily. It's going to build up a track record with investors, and it's also going to allow your money to go further. So instead of being able to buy a couple duplexes or whatever it is, now you're going to be able to buy 40 units. You're still going to have control. So it's not like you're taking, let's say, that 200 grand, for example, and investing with us, where you give up control. You have the control. You get the benefit of the bigger deals. You get the benefit of getting some extra money in your pocket, but probably gets offset. And you're starting to build that track record, getting the non-recourse debt, which is a big difference as well. Even just the non-recourse debt alone.
The terms are better. You can buy, you know.
Yeah, I mean, even if you just bought 2 20 units, let's say, for example, just the benefit of getting the non-recourse debt, in my opinion, I think outweighs everything.
I also think one thing that, you know, they're going to be deals that become more upside driven for you guys to make money. So the day-to-day, it's not going to make sense to do it. But that 20-unit space in the market similar to where you guys are buying, you could probably find a seller that has no idea what he has, that's not billing back water, or that's not sub-metered. If you found that deal and you put in 80% equity raise, 20% your equity, and go back 80% bank debt, that deal you're going to buy, let's say you bought it at an 8 cap, you're gonna drive value. You're gonna, by billing back water, by doing very minimal things that you guys are doing in the background of both of you, you're gonna be able to get that to the finish line and flip out of it in a year or 12 or 24 months. And you're gonna that's where you're gonna make your money. But I think that 20-unit space, you're gonna have so many more opportunities. And if you came to me and said, "Hey, I got $1 million," right? That $1 million is gonna generate you nothing until the back end, and it's not going to be nearly as good as if you went in and bought 420 units. That's what I would do. I would look to leverage your experiences and what you're doing on maybe an unsophisticated owner. You know, an older guy that sold you 7 condos at 85, you know, whether he got market price or not is irrelevant, but if you found that guy on an 80 unit in Pennsylvania or wherever it is, there's got to be untapped value in that I'm sure nobody knows about.
And I think if you can show people a small deck of what your properties have done already, and the value you've been able to generate and create for yourselves, I think a ton of people would be happy to invest alongside you guys. Especially in a market you're doing and in similar properties. I think that's a great value prop for people. So I would encourage you to look more that route and you know, start having those conversations with people, see what people are interested in.
Yeah, that's good advice. You know, as an investor, you're always trying to refine your path and figure out the best exact way to go and leverage off people that have more experience like you guys and try to use that to, you know.
And the other thing too is, if let's say you get 5, 6, 7 people to invest and you do the deal, you may very quickly realize you hate dealing with investors and you decide to never do another deal with an investor again. It'll be a way for you to test those waters as well for yourself personally.
Investor relations is
or it could be you find out, hey, I really don't mind, and I love being able to spread my money out across multiple deals. It's totally worth it. And now you can start being, a small syndication model or whatever it is. That's also another thing for you guys personally of, hey, let's figure this out.
But I think it's definitely something my next step, I agree 100%, go after a small 20, 30 unit syndication, see how much money you guys can raise, and put it to bed. I think it's definitely something you guys should try because you'll make money if you find the right deal.
100%.
And the SBA loan is probably key for a deal like
absolutely.
that.
Small balance,
yeah.
Absolutely.
Absolutely. But we do have to wrap it up there. We are kind of running over a little bit. If somebody wants to reach out to you, just kind of pick your brain a little bit like that. What's the best way for somebody to get in touch with you? Whether it's email, phone number, social media, what is it?
Yeah, sure. So I don't know if I mentioned this before, but I'm the managing partner and co-founder of GMG Investment Properties. You guys can visit our website at gmginvestmentproperties.com. You can also email me at lance@gmginvestmentproperties.com. You guys can email me at lance.moskal@gmail.com. Also reach me on my cell, 516-650-1397. Always interested in networking and teaming up with other investors, whether that give advice, discuss a deal, anything you may have it. I love to pay it forward and give back. And if I can help with a small conversation with anyone, I'm more than happy to do it.
Awesome. Thank you so much for coming on. I think this was fantastic. Hope to have you again sometime in the future.
Yeah, thanks for having me. Love to come back.
Our pleasure, brother. Thank you.